we would use any weakness to reposition the portfolios for 2021. A good starting point for the rotation would be taking profits on tech overweight. That certainly happened last week. And adding to the financials. Mislav joins us now over the phone. Mislav, love getting you on the programme. Thanks for joining us today. Let's just start right there. Why do you like the financials, sir?
So the starting point is extreme. You have right now technology up 20% on the year, banks down 40% on the year. Growth versus value run that we have seen year to date has never, in at least the last 50 years, we have the data been witnessed. So in my view, this is an important starting point. And then the elections, our call is irrespective of who wins, the rotation will happen. The market is primed for the rotation here.
Mislav, is the underperforming dividend factor part of the same story with the financials?
Yeah, I would say so. I think a lot of banks could have paid dividends, but they were not allowed to. They had to cancel. So this huge collapse in the banking stocks, which up until last week were still down 40%, that would be turning around, in my view, if the dividends were to come into play. In addition to what you talked about before, I think bond yields, you can't run away from the bond yields. Last 6 months, bond yields did not play ball. PMIs rebounded, but bond yields stayed flat. And that's why growth kept outperforming value. If the dividends and the bond yields were to turn, then the value will perform.
What gives you confidence, Mislav, that they will, that bond yields will turn?
You have a few things here. First, the stimulus will come irrespective of who wins. In the last 2 months, market is working through this mini W. We are calling it a mini W part of the cycle. You had a V and then a resurgence in the virus and stalling PMIs. That is a bit of a problematic situation for the bond yields. However, after the elections, the stimulus comes through again. You could potentially have less trade uncertainty, weaker dollar, more clarity politically. And then very importantly, the labor market. Labor market has been a deflationary force. You had a negative private sector wage growth all the way through in the last months. Around the turn of this year, we think the private sector wage growth will start to bottom out, and that will allow Fed to put their foot off the bond yields, and bond yields could actually pick up.
Mislav, this is a big call to think that bond yields can pick up materially, given what's playing out in Europe right now. Can you connect Europe and just join the dots for me here? Europe, I hope it's a mini W, but I think most people's base case is it could be worse than that, Mislav. Where does Europe fit into this call?
We have been the whole of this year overweight U.S. versus Europe because we have been long technology versus banks, and Europe, you saw in the last 6 months, Europe went nowhere. I mean, Stock 600 is where it was in May. However, I think there is going to be an improvement in Europe as well. We had a bit of a weakness, a bit of a de-risking in the last few weeks. The market is now absorbing the lockdowns and shutdowns, so that is starting to move, in my view, within a few weeks behind us. And Europe is ultimately a prime value play. If you think banks will start to perform better, and we actually finally do, we have made this switch, then you should not ignore Europe.
So, Mislav, my final question to you is time horizon for this trade. As I look out the next 5 to 10 years, this is a difficult call, but it looks like trend growth is lower. That means interest rates will also likely be lower. Our tolerance for higher rates has clearly diminished because we've added so much debt to this economy. Over the long term, do you see that as an environment where banks can have this durable outperformance over a long period of time? Or is this an 18-month, 12-month, 2-quarter trade? What is it, Mislav?
In my view, it's not 5 to 10 years. This is not a regime shift, but this is 2016, 2017 type of a 3 to 4 quarters trade.
Okay.
Like then you had a crash and you have stimulus and a reacceleration. So it's going to be a meaningful trade.